All righty. Well, to anyone here, welcome to our webinar today. As you can see, it is a topic surrounding S Corps for mental health professionals. And what I'm going to do, obviously, before we get started here, I am going to wait for other people to join. Okay. All righty. Well, if you guys don't mind, kind of while we're waiting for people to trickle in here, in the chat box, put where you're from. Put where from the country or out of the country where you're from. I'm really curious. And what I'm going to do as well is I am going to kind of go through some housekeeping rules before we start the webinar here. But essentially, this replay will be sent out 24 hours after this webinar is concluded. So, if you shared your email on the email list, then you'll get a recording of this webinar. And if you have any questions about the webinar or any suggestions or anything like that, please, send us an email to webinars@collective.com. And we'd love to hear your feedback. And really, that's all I've got. And let's see where people are coming in from. South Carolina, Deborah said that's a beautiful state. Jillian, living in Montana. I've always wanted to visit Montana. I've heard that's beautiful as well. Hannah's from North Carolina. Okay, my parents actually just moved to North Carolina, like literally in the mountains. So, I'm excited about that. And Matt is from Florida. Me too. And I'm sweating all the time from Florida. Seattle. Emma's from Seattle. Okay. And Debbie is from Arkansas. Okay, well, Debbie, I'm originally from Southeast Missouri, so we're pretty much neighbors. Okay, and I think that we have got enough participants to go ahead and get started here. Well, first of all, welcome, mental health professionals. And I'm so glad that you're here, and I'm glad that I'm the one running this webinar, is because I can finally, have my mental breakdown that's just been building up for the past few months, and I'll have professionals to help me through it. But seriously, thank you for what you guys do, and obviously, thanks so much for coming to the webinar today. And it's important. It's an important topic because, as mental health professionals, of course, your focus is on your clients. Your focus is on, essentially your patients and taking care of them. And, I think a lot of times when you have that sort of responsibility, sometimes the taxes, the tax planning, the strategy, it kind of goes on the wayside. So I just think, specifically for mental health professionals, this is a good session to be involved in. And let's go over the agenda. One is the overview. Of course, this is surrounding S Corps for mental health professionals. Two, we're going to go through some basics, what it means to be self-employed. Because, in the course of my career here at Collective, I speak to a lot of mental health professionals. And a lot of them seem to be coming, from W-2 jobs and, full-time positions. So that like just to go through the basics of being self-employed is important. Now, we'll also go through LLC and S Corp basics, how they work. We'll go through the differences between LLC and S Corps and, kind of which one you should be. And, that brings me into the next point of the agenda, is choosing the right structure for your practice. And of course, number 6, how to get started. How do you get all this administration procedure started? And then at the end, we will have a Q&A session. And just to quickly mention, You will see, I believe you'll see two boxes. You'll see a chat box and you'll also see a Q&A box. And if you don't mind, put logistical things like sound issues, connectivity issues, or anything like that in the chat box. But in the Q&A box, any sort of tax questions or anything like that, throw that in the Q&A box. Oh, also, this is important to mention. This webinar, it's for educational purposes only. Consider this information. Don't consider this, actual tax advice or legal advice or anything like that. It's simply information. So before you do anything, anything official, it's a good idea to, speak to a tax professional before doing anything. A quick word about Collective. You can think of us as kind of like an all-in-one solution for a self-employed person. We're a platform that kind of checks off all the boxes of what it means to be self-employed and how to handle that. Here's your money when you're self-employed. Long story short, it's all over the place. For one, you've got to get your business set up. That's complicated in itself. But also, you have to make sure the business stays in compliance on an ongoing basis. You have to estimate your taxes. In order to do that correctly, you have to have accurate financial reports and so on and so forth. So, it can be pretty overwhelming, especially when you're coming from a W-2 job or, a situation like that. When you need to make a financial decision, when you're self-employed, these sorts of decisions have to do with so many different things. And when you're not self-employed, when you're just kind of working for somebody else, the decisions, your financial decisions just tend to be a little bit more straightforward. But when you're self-employed, it's simply all over the place. However, that's where Collective comes in. And, like I said earlier, think of Collective as kind of like an all-in-one solution. Like all these things, these different categories that are required to be self-employed, to be an S Corp, Collective would handle it for you. Okay, so here's a poll question. And my wonderful partner here in running the webinar has just started, her name is Sarah, and she has just started a poll. And the question is, what are you struggling with most right now in terms of running your business? Is it setting up the business, setting up the LLC? Is it taxes, bookkeeping? What are you struggling with the most right now? I used to always try to guess to see which one will be the right answer, but I'm always wrong. So I'm not going to do that this time. I'm not going to embarrass myself. Just kidding. I think it's setting up your LLC or S Corp. Let's see if I'm right. Okay. Wow, I was right. Setting up your LLC or S Corp. I'm amazed. Um, Usually I'm wrong, but hey, here it is. Well, hopefully by the end of this webinar, you'll have a little bit more of a better idea of how to do that. Okay. Well, let's go through some basics and kind of what it means to be self-employed. For one, when you're self-employed, unfortunately, you pay a lot of taxes. And there's kind of two main categories of taxes that people pay when they're self-employed. The first one are income taxes. And it's what most people think of, when you think of taxes in general. Um, Income taxes, they're based on brackets. They're based on marginal tax brackets. So, like for example, let's say that someone makes, $100,000. The first $10,000 of that money might be taxed a certain percentage. Like let's theoretically, and this could be wrong, don't take this as honest truth, but let's say that the first $10,000 is taxed at 10%. And from $10,000 to $20,000, that's taxed at 15%, and so on and so forth. That's how the income tax works. People also pay self-employment tax. Shocking, right? But essentially, self-employment tax is a flat tax rate. It's not marginal like the income tax. And it's a flat tax rate of 15.3%. What it is Social Security and Medicare taxes. It literally goes to fund our Social Security and Medicare programs. That's what the 15.3% is. This tax it's interesting because when you're an employee, when you're working for somebody else, you still pay the self-employment tax in effect because you pay the Social Security and Medicare tax. It's even the same tax rate. Like it's 15.3%, but the difference is your employer, whoever's paying you, pays half of that tax rate for you. Just by law, they're required to pay half of your Social Security and Medicare taxes. So keep that in mind. And when you're self-employed, you pay both halves. That right there is why self-employed taxes are so expensive. It's because when you're self-employed, there is no employer to pay half of your Social Security and Medicare tax for you. And this example right here, I believe it's an example of someone making around $100,000. When you're an employee making around $100,000, your employer pays $7,500 and you pay $7,500. But when you're self-employed, making the same amount of money, your tax bill right there doubles. So that's why it's important to kind of make sure that your self-employed situation is optimized. Okay, let's go through some business structures now and how this works. No, I'm sorry. Let's continue on with how taxes work. So this is how it works when you're just a sole proprietorship or an LLC. This is kind of how you basically calculate your tax. One, you have your total revenue, which is just the total amount of money that your business brings in. That's one. Then you subtract your tax deductions, which is just simply another word for business expenses and write-offs, things like that. Then you get your net income. That net income is either a profit, positive number, of course, or it's a loss. It's a negative number, meaning that you've spent more than what you've made in a year. And that profit or loss is reported on your personal tax return. And if you have a profit, you owe tax. So you owe the self-employment tax, and you owe the income tax as well. If you have a loss, you don't owe the self-employment tax or the income tax because there's no money to tax you on. Why does this stuff matter? Well, for one, how you're taxed is different when you're an LLC or an S Corp. And it could mean the difference of thousands of dollars in the taxes that you pay. So, once you reach a certain amount of income, it's definitely it's an important conversation to be having, definitely. First, now we'll get into business structures. And when you're talking about business structures, the first good question you always ask is, what is an LLC? That's kind of the first thing that comes to mind when people think of business structures, is an LLC. But first, before we kind of get to LLCs, let's talk about legal structures for mental health professionals, for people like you. Limited liability companies. It depends on what state you're in, but there are certain states that don't allow you, as a licensed mental health professional, don't allow you to operate under a standard LLC. There are some states that require you to either set up a PLLC, which is a professional limited liability company, or they require you to set up a professional corporation. And again, that varies from state to state. But there's simply just some states that require you to set up sort of a special entity for licensed professionals. So, for people like lawyers, doctors, nurses, psychologists, people like that. What if I don't have a legal structure? What if I don't have an LLC or a PLLC or anything like that? You're a sole proprietorship. And it's another term is a sole prop. There's nothing you need to do if you're just a sole proprietorship. If you have self-employed earnings, you're automatically a sole proprietorship. There's no, form you need to file or anything like that to become a sole proprietorship. And, keep in mind that when you are a sole prop, there's no distinction, legally speaking, between you or your business. So, all of, your liabilities and losses and everything like that is, you're liable for them. And again, you don't have to file, an annual information return with your state like you do an LLC. LLC basics, how do they work? One, you set it up with your state of residence. Wherever you are living, especially in a self-employed sort of business context, is usually the state where you need to set up your LLC. It provides limited liability protection for your personal assets. So for any sort of business lawsuits, creditors going after your business and things like that, usually they can't go after you personally. It lends credibility to your business. When you have a business structure set up, people tend to take you a little bit more seriously, and you look more credible to the public. Also, it allows for multiple owners, for multiple members. And essentially, that's called a multi-member LLC, which is just usually another word for a partnership. And the business profits, just like a sole proprietorship, are passed through to the owner, to the owner's tax return. How it's taxed is pretty interesting. If you're an LLC, if you have a business structure set up, a single member LLC, you're taxed just like you are a sole proprietorship. It works exactly the same way. Of course, unless you ask the IRS to change how you're taxed. Now, there are some differences between a sole proprietorship and an LLC. They're taxed the same, but one, an LLC requires registration with your state. A sole prop doesn't. The LLC, like I mentioned earlier, provides that sort of legal protection, that limited liability. A sole proprietorship does not provide that. An LLC can also have multiple owners. Officially, a sole proprietorship is only one person. And also, a sole proprietorship can't become an S Corp. It can't change the way that it's taxed. You have to have an LLC set up to do that. And here's the question of the hour. What's an S Corp? First of all, there's a lot of people who I speak to that have a little bit of a misrepresentation about what an S Corp actually is. An S Corp is a tax election. It's not a business structure. So it's not an LLC. And believe it or not, it's not a corporation. It's a tax structure. So the IRS decides how each business structure is taxed. And like I mentioned earlier, when you just set up an LLC, the IRS just automatically assumes that you're taxed like a sole proprietorship. That's just how that works. And if you have an LLC set up, you can ask the IRS to tax you as an S Corp, which could potentially save you some money on your taxes. When you're an S Corp, this is how taxes work. It's quite a bit different from just a sole proprietorship or an LLC. One, S Corp owners, and the entire reason to make an S Corp election is to save on that self-employment tax we were talking about, that 15.3%, that flat tax rate. S Corp owners do not pay self-employment tax on the business's profits. So what happens is when you make an S Corp election, and that's paperwork filed with the IRS, you set up an LLC first, and then you file paperwork with the IRS to become an S Corp. And what happens is that essentially creates kind of an employee-employer relationship. You become an employee of your own business, pretty much. And since you're an employee, you're required to pay yourself to put yourself on payroll, to pay yourself a reasonable compensation, to pay yourself a wage. And what's interesting about S Corps is only your wages, whatever you pay yourself in salary, is subject to the 15.3% self-employment tax. However, the rest of your money, the business profits, or just all the money outside of your salary, that's no longer subject to the self-employment tax at all. Now, keep in mind, though, that both your business profits and your wages, the salary that you pay yourself, that is still subject to income tax. Both of those are still subject to income tax, but it's the self-employment tax that changes. All right, just to kind of recap of how it works when you're a sole proprietorship or an LLC, this is how it works with an S Corp. One, you have your S Corp revenue. You have your total revenue at the top. Then you have two things that are technically write-offs for your S Corp. One, you have your just normal operating expenses, like marketing cost and your home office deduction, mileage, things like that. And then you have your owner's salary. You have your S Corp salary that you pay yourself. Those are technically both expenses for the S Corp. That salary is subject to payroll taxes, which is just another word for self-employment taxes. That's what that is. Then after that, the S Corp itself has either a profit or a loss. Now, that profit or loss flows to your owner's tax return. Both that profit or loss and your salary, both of that flow to your tax return, and both of them are subject to income tax. That's how it works with an S Corp. Okay, here kind of goes through some differences in taxation between an LLC and an S Corp and how big a difference it is between the two. Now, one, over here on the sole prop side, or just the LLC side, let's assume someone has a profit of $160,000. You can't pay yourself a wage in a sole prop or a single member LLC, so that's zero. So therefore, all of your money is subject to the self-employment tax, the 15.3%. There is no way to limit the self-employment tax when you're a sole proprietorship. So your total tax is around $24,000. It's a pretty hefty tax bill. Now, an S Corp, you're making the same amount of money. Let's just assume you're making that 160 grand again, but this person has determined that a reasonable salary for them is $60,000. Now, only that 60 grand is subject to the self-employment tax, the 15.3%. So that drops from $24,000 to $9,000. It saves you $15,000 in taxes. So it could be a huge difference between the two tax structures. Keep in mind, though, that the salary amount, how much you pay yourself, is important, because there will be a lot of people that will ask me. They'll say, okay, well, if I'm only subject to the self-employment tax on my salary, then why not just pay myself a super low salary? Like $1 or $1,000 or something like that to pay less in the self-employment tax. And my response is because the IRS would probably have a problem with that. And it's likely that you would get audited. And it's likely that they would deem that unreasonable and, penalize you and make you pay back self-employment tax and things like that. So what the IRS says is that your salary has to be reasonable. And unfortunately, there is no set standard for reasonable compensation. It's simply just a facts and circumstance argument. Now, keep in mind, though, that collective or your tax professional can help you pick a number. We can help you suggest, what your salary should be. How do you get paid from your S Corp? How does that work now? Well, of course, one, you've got your business income that they're at the top. Then you've got your operating expenses. Then you're typically paid in three ways. One, you've got a payroll. You're paid via a paycheck. So that comes consistently. Then you take something called distributions. And distributions is essentially when you transfer your S Corp profit to yourself. That's how you take a distribution. And you can do that anytime you want to. And essentially how you take a distribution is you transfer money from your business bank account to your personal bank account, but also you have reimbursed expenses. So for example, there's some expenses that you can write off that aren't necessarily going to be showing up in your business bank account, where all your financials are handled. So the S Corp can actually reimburse you for, a portion of your rent or mortgage interest or mileage and things like that. And it's a way to write off allowable expenses like that. Okay, we went through differences between a sole prop and an LLC. Now let's talk about differences between an LLC and an S Corp. And there's a couple. So technically, you remain an LLC when you make an S Corp election. So you keep, first of all, you keep that legal shield between your business and personal assets. You're still a pass-through entity when you're an S Corp, just like an LLC. However, self-employment tax are only subject to the business profits on an S Corp. With an LLC, it's subject to the whole shebang. There's income tax on profits. That's true with both an S Corp and an LLC. Of course, you don't pay yourself wages when you're just an LLC. That comes through when you're an S Corp. And also, it's important that when you're an LLC, typically you don't need a business tax return. Those usually don't exist. But when you're an S Corp, there is a business tax return requirement that kind of, comes into existence. Which one is best for you? An LLC is best for those who are new to business, that don't have much earnings. And typically what we say is that earn, quite a bit less than $60,000 in net profit for a year. People that kind of need a simple, straightforward tax structure, and also, whose state licensing board allows them to form LLCs. Again, like we mentioned earlier, for certain mental health professionals, there's certain states to where you're required to form a professional limited liability company or a professional corporation, or things like that. S Corps are best for people that want to maximize their retirement savings. There's some really cool retirement strategies you can do with an S Corp that earn a little bit more or substantially more than $60,000 in profit per year and have enough cash flow to make regular payroll runs, to pay yourself a salary regularly. Again, like I mentioned earlier, mental health professionals should keep this in mind. And really all licensed professionals should probably keep this in mind as well. Now, if you are involved in telehealth, that usually requires some sort of multi-state licensure. So when you're serving clients in multiple states, like even virtually, like even just like over the computer, you may require a separate license for each state jurisdiction or just each jurisdiction. So keep that in mind. And then also you might trigger nexus for tax reporting. So if you're serving clients in multiple states, then it might trigger a filing requirement in additional states. So we strongly recommend, and like especially since it's different with each state, ask your licensing board or your Secretary of State for their policies surrounding telehealth and licensing requirements. It's really important to do that. And also might be good to talk to an attorney, a licensing attorney as well. Now, also keep in mind that working with Collective can only support LLCs. We can't, as of yet, we can't support PLLCs or professional corporations. And like I mentioned earlier, there's certain states like California, New York, Texas, you can see them there. They require either a professional corporation or a PLLC. And unfortunately, we're not able to service those states for licensed mental health professionals. So keep that in mind. Okay, how do you start and operate your S Corp? First, of course, you set it up. You create an LLC, and with mental health professionals, of course, your first step is to check with your licensing board to see if you can form an LLC. Then you file your articles of organization, with your Secretary of State on their website and any other paperwork that they require. And then you draft an operating agreement. And an operating agreement is essentially a document that's kind of like the legal bones behind an LLC. Who owns it? how it's structured, things like that. Then, of course, you make your S election with the Internal Revenue Service. Before you do that, you get an EIN number with the IRS. You file the S election with the IRS. You register for a payroll account because you yourself will be on payroll. And then you need setup tools. You need tools to run the S Corp. One, you need bookkeeping tools. You need accounting tools. Because when you become an S Corp, the complexity of the accounting increases a little bit. You need payroll software as well. So when you're an S Corp, you pay yourself a paycheck. So you need payroll software. You don't want to do payroll by hand, believe me. Then you set up money flows. You set up how you pay yourself. You get a business bank account to where you can pay money out of that account. You get a business credit card. And you ensure that deposits from practice management software are deposited in your LLC bank account. So if you have software that, obviously that manages your billing and your practice, make sure that LLC bank account is connected to that. Then you've got to operate your S Corp on an ongoing basis. You'll need to file both business and personal tax returns for the federal and state. Because when you're an S Corp, a business return, kind of comes into existence, and a business federal return. And there's even certain states that have business state returns as well. You'll have to file quarterly payroll returns. You'll have to issue 1099s for any sort of contractors. And then, of course, you'll need to maintain your entity. You'll need to maintain your LLC or whatever entity you have. File your state paperwork annually or biannually. Depends on what kind of structure you have, but you might want to maintain minutes and maintain meeting notes in minutes. And then, of course, keep up with your books and tax obligations. Maintain your books monthly, make sure your expenses are organized. And then, of course, pay your taxes on a quarterly basis to both the federal government and to your state if they have income taxes. Okay, well, here's the million-dollar question. Are you ready to start an S Corp? Or the question is, are you thinking of switching to an S Corp? Okay, and in the meantime, I think I see a couple of questions here in the chat box, and absolutely, I will get to those at the end of the Q&A session. So we'll make sure we get those answered. All right, let's see how many people are switching to an S Corp. Okay, still not sure. All right, well, it can be a little confusing, especially if you aren't sure how much you're going to make, especially if you're just starting out. It can be a little bit uncertain whether or not you need to go with an S Corp. But thankfully, with Collective, before you even join, you have a call with a business advisor, and they'll go through your situation. They'll kind of see if an S Corp could potentially be in your best interest. So, before you even come on board with Collective, we'll make sure that it's right for you. Okay, so Collective, when you're on your own, especially when you have an S Corp, you have a lot of things to juggle. Because unfortunately, to save that tax money with an S Corp, there's some additional administrative requirements you have. We just went through them. And when you're on your own, as you can see, they're all over the place. Collective, though, brings those all in line. Like I've said several times, think of Collective as an all-in-one solution for an S Corp. Everything required, sort of admin-wise, Collective will handle. We work with, one, sole proprietorships, people that don't have any sort of structure set up. We work with current LLCs, people that already have that set up. And we work with LLCs that are already filing as an S Corp. Now, we give a suggestion of waiting to join Collective until you're making $60,000 or more in profits. Now, that's not set in stone. There are some certain people that still join Collective that are making a little bit less than $60,000, but that's a general rule of thumb to keep in mind. Then we work with mental health professionals who can operate under an LLC. Like I said, it's important to check with your state licensing board. One login to run your business. That is kind of just, I guess, the main idea behind Collective. Before Collective, you had several logins to run your business, especially when you had to run an S Corp. You had to have a separate payroll processor. You had to have a separate bookkeeping software, separate invoicing feature, separate a separate, CPA to file your S Corp tax return, a bookkeeper. But with Collective, we rope it all into one. And essentially, we'll set up the business, of course, form the LLC, get your EIN number, make your S election, and draft your operating agreement as well. Then we'll provide full service bookkeeping and accounting, monthly bookkeeping. So we'll give you a profit and loss statement, a cash flow statement, and a balance sheet each month. We'll make sure that the S Corp specific accounting gets taken care of. We'll take care of your accountable plan, which are those reimbursements that I talked about earlier. And we'll send you, like I just mentioned, we'll send you those monthly reports. We'll handle the payroll as well. We'll provide the payroll processor and run payroll on an ongoing basis. You also can pay any sort of contractors on our software, and it'll file the 1099s, the tax paperwork. So that's a convenient option for you. We'll take care of the payroll tax filings, and we'll also give you a salary recommendation as well. We'll give you some guidance on reasonable compensation. Also, we'll take care of the S Corp taxes. We'll prepare and file both your federal and state S Corp tax return. And then, of course, we'll calculate your quarterly estimated taxes and remind you to pay them. And then ongoing compliance and support. For the annual compliance reminders with your state of residence, with your LLC, we'll remind you, of course. And then you've got a team of professionals that you can message at any time. Okay. Also, for existing LLCs, we're still at a time frame that we can backdate your S Corp to July 1st. So any money that you've made in July, if you have an LLC in place, we'll be able to kind of rope all of your July income under the S Corp. So, if you've made, $10,000 this month or $6,000 this month, it could be a quite a noticeable difference in your tax bill if we're able to backdate that S Corp election. Okay, here's how much we cost. If you go the monthly route, Collective's a flat rate of $349 a month. If you pay in full, just for 12 months at a time, we give you 15% off. So then that comes out to around $3,560 a year. Then, as of now, you've got a one-time sort of setup fee of $199. And that includes, if you're a current LLC, doing some bookkeeping cleanup, setting everything up. Now, also what we offer, before, like I said, before anyone even joins, we offer a free call with a business advisor to kind of go through your situation, see if you need to be an S Corp, and essentially see if Collective would be a good fit for you. And since you're a webinar attendee, you get a special discount code. And it gives you a sweet discount, and you'll find out what that is if on the call. And we'd love to have a conversation with you. And even if it turns out that Collective isn't a good fit for you, we'll point you in the right direction. We will, we'll give you some referrals, and we'll make sure that that we equip you with some good tools to run your business. But now it's time for some Q&A. And I believe that we already have some great questions in the chat box. And for some reason, I can't see the questions in my channel. So Sarah, if you wouldn't mind to copy and paste the questions in the chat box, I would really appreciate that. It's not letting me click on my Q&A questions. But I think there are already some questions that are in the chat box. One, Lisa has a question. Does collective work with PLLCs? Unfortunately, not right now. That may or may not change in the future. But unfortunately, right now, we only work with LLCs. If we already have an LLC, can we elect to be taxed as an S Corp, or do I have to start from scratch with a new LLC? That's an excellent question. And no, since you already have an LLC, you can make an S Corp election on that existing LLC. So you don't have to create a new one. And that's what we would do. If you already have an LLC in place, Collective would make an S Corp election on that existing LLC. Okay, Kelly has a question. What income level do you recommend to consider an S Corp? Well, we give a general recommendation of around $60,000 in net income. And the reason that we do that is, in my experience, when someone has a net income of around $60,000, most of kind of the just very general tax savings calculations that I've seen have come out by making an S Corp election, have come out to around $5,500 a year. So it's kind of a good rule of thumb to say, okay, if I'm at least making this much money, I can reasonably expect for my tax savings to be more than what I pay collective. So it becomes kind of a no-brainer at that point. Ooh, what if all my 1099 income is needed to pay personal bills? Is there any benefit for my taxes to become an S Corp? That's a great question. And yes, there likely still is a benefit because your personal bills aren't write-offs for the business. So you can't write off any sort of personal expenses, even if all your money is going to paying them. You can only write off business expenses. So you can't write off your grocery bill. You can't write off any sort of personal mileage or personal utilities. You just simply can't write that off. So your personal expenses don't really matter whether or not you become an S Corp. It's the amount of your business expenses. But if you have a lot of business expenses and you're not profiting, then it's probably not time to become an S Corp yet. If back taxes haven't been filed, can the S Corp be declared now and work retroactively? It technically is possible to backdate an S Corp election um, in previous years, but you'd need a tax attorney. Like that's a very involved process, and it's usually expensive. Does collective work with LLCs that are not under the mental health umbrella? Oh yes, like we work with all kinds of professionals. So all kinds of consultants, um, software engineers, online creators, um, just all kinds of professionals. So not just with mental health professionals, but this webinar just tends to be geared towards mental health professionals. Ooh, here's a good question. Does today's content apply only to licensed professionals? How about non-licensed? For example, I am a translator interpreter and it does not require a license. Does it work for me? Sure, it very likely does. If I mean, and again, always check with your state licensing boards or anything like that. But and you don't have a license, so how can you do that? But no, if you're not a professionally licensed professional, it's unlikely that you require a PLLC or a professional corporation. So it's fine. Is the collective payment deductible? Yes. Like if we're not filing your personal return, which we aren't for any new members, we're just doing the business return, then yes, our the collective membership is tax deductible. Does that income need to come specifically from the LLC, or is it a total income? Yes, it would need to specifically come from the LLC, from your self-employed situation before electing the S Corp tax status. It'd probably need to be around $60,000. Okay. Well, I believe, I think one more question came in. I'm going to give Sarah a little bit to get that in the chat box for me. How do IRS timelines for S Corp elections impact existing LLCs if there has not been substantial income? Well, if there hasn't been substantial income, then it shouldn't impact it at all, because then you likely don't need, if you haven't had substantial income, then you likely don't need to worry about backdating the S Corp election or roping that in. Um, so then you're probably fine. It sounds like you need to start as an S Corp from this point onward, and we would go from there. Okay. And I believe that's all the questions that we have. Well, great questions and great session. I enjoyed it very much. And thank you guys so much for coming. And, like I said, before we even encourage you to sign up for a collective or go forward with an S Corp, we offer a free call, a free consultation with a business advisor before you even join, to kind of see what's in your best interest. So I'd encourage you to schedule a call, bring that discount code with you. And you can learn about collective, you can learn about an S Corp, and we'll figure out what's the best route for your business. And like I said, here in the next 24 hours, this webinar will be sent out to you. This recording will be sent out. So, don't worry if you've missed some stuff. And in the meantime, please check out our website. You can schedule a call from there. We have really good and handy, tax calculators, tax savings calculators. But as of now, that concludes the webinar today, and I hope to see you soon.